Hello and welcome to another edition of MEMA Supplier Insights. I'm Mike Jackson, Executive Director of Strategy and Research at MEMA, and thrilled to welcome Kathy Gutierrez, Partner, Talent and DEI Transformations from Deloitte Consulting. Kathy, great to have you with us here today.
Thank you so much, Mike. I'm really excited for this conversation.
Hey, so today we're going to be going through our fourth quarter vehicle supplier barometer and where we hear from our executive members. And clearly, the fourth quarter on talent and HR. And so a great range of topics. And so let's just jump right in. And so with that, our supplier barometer index, really important here. If we look at the measure 36 is 14 points below neutral. And so sadly, for the 11th quarter in a row, the supplier industry, the sentiment here has been decidedly negative. If we look to the left, you see the distinction between light vehicle and commercial vehicle. Light vehicle a bit more pessimistic than our commercial vehicle members. And so this is certainly looking at the 12-month outlook and how has it changed over the past quarter. And so what this really means is that quarter over quarter for 11 quarters in a row, the supplier members have felt a tremendous amount of pressure. Kathy, I'm sure that you're seeing a lot of these same kind of signals with your clients. Is that the case?
Yes. Well, we've just had one thing after another, right? With the pandemic, the chip shortage, high interest rates for consumers, really, very low levels of inventory there a few years ago, and now very high levels of inventory. And so I do think that's affecting suppliers. They have to kind of go where the consumer is really being affected. So and so they really feel the brunt of this, I think, in addition to the OEMs, but they get it quite a bit. So I'm not surprised by this, but it is disappointing to see.
No, you're exactly right. You're exactly right. Let's continue on. If we look at the top threats of the industry, what are your greatest threats over the next 12 months? Number one, poor sales of vehicles and programs supplied. And if we look here, we know that clearly there's been a tremendous amount of attention paid to new EV launches, new EV programs, and many of those programs have fallen well short of plan. And so I'm quite confident that that is a key driver here. In addition to then weakness in the economy, and then also if we look at point number 3 and 4, changes in government trade policy, as well as implementation of new government regulations. Those have actually held relatively stable. And I want to make a really important point of distinction. The responses that we gathered here for the fourth quarter barometer were really largely gathered. The vast majority were gathered prior to the election outcome. And so we know that clearly tariffs and changes to government trade policy will be primary here going forward. And so stay tuned for our first quarter barometer there. But obviously, the changing dynamic here within the environment for demand for vehicles and vehicle propulsion by propulsion type is continues to represent a bit of a whipsaw. Are you seeing the same thing?
Absolutely. And, those numbers, right, in terms of trade policy, right, we're definitely expecting to see those be affected in this in the next time you release this. But I think the poor sales of vehicles, very much has an effect on suppliers and the talent there. We're also seeing obviously higher incentives to get some of that inventory off the lots for dealers. And so that cuts into margin, right? That cuts into the margins for dealers and to OEMs, and it really places a strain on the entire industry. So I'm not surprised about the poor sales being the number one threat. Yeah, this is pretty consistent with what I'm seeing.
No, absolutely. Absolutely. Let's continue to drill down a little bit more because I think here, if we look at industry indicators, for the following indicators, please indicate what change, if any, your company has experienced over the following timeframes. So we look at here on a 12-month change, so what's happened a year ago, and then we also look at a 1-month basis. And what's pretty remarkable here is that new orders, so again, 50 being neutral, anything that is below 50 is declining, anything above 50 is increasing. And so if we look at new orders, they're declining and pretty significantly. If we look at production, they're also declining rather significantly. And again, on the 12-month as well as the 1-month basis. But then if we look at costs are also significantly higher, both for the 12-month and the 1-month change. Represents certainly a significant number of headwinds for employers.
Yeah, absolutely. And maybe one thing to call out here, and we'll get to it a little bit more in the HR and talent section, but if if there are these drastic changes month over month, and even over the past 12 months, it really forces suppliers as an employer, it struggles for them to forecast what talent they need, right? And so things like workforce planning becomes very important for the auto industry as a whole, but especially for suppliers who are so reliant on order, on demand, right? And so if they don't have strong capabilities in those areas, it's going to continue to be very difficult. And the lack of agility that a lot of these organizations have is going to become a huge Achilles heel for them. So this is really pointing to the volatility and uncertainty that we're going to continue to see. Yeah, I think we'll hit more on it in the HR and talent section.
But Kathy, those are great points because I think you're exactly right. Those represent additional costs, right? If you're trying to train for workers and making sure you've got enough workers to help support EV demand, and EV demand all of a sudden falls short, well then it has to be reallocated. Well, that requires a different type of workforce or retraining and the like, and so significant implications there, right? So
Yes.
great points all across the board. So let's keep going. So if we look at HR and talent, so here, this is the question, given competitive hiring pressures and your effort to retain and capture new talent, are you evaluating gaps between, responsibilities versus skills in your organization? Well, most are. And so the question is here is, if yes, what's the magnitude of each gap? And so if you look in the center, as of last year, 58% of respondents indicated that they had either a moderate or a wide gap. And that's actually, declined rather significantly to 40%. So from 58 to 40% this year. That's a pretty significant improvement. I would think that that's positive, Kathy, but welcome your feedback.
I'm a little hopeful there. I think perhaps there's been more investment on the skills side, and we hear a lot of companies aspiring to become skills-based organizations, focusing more on skills versus education or experience. And so I'm wondering if that's actually started to hit some of the suppliers here, and so they feel like they have a better handle on identifying what skills they need and the skills that they have. Just that awareness alone may have caused this to kind of shrink. So I'm really happy to hear that. And a lot of OEMs as well are really thinking about skills. So this is very good. This will hopefully continue to shrink in the next time we run this.
Absolutely. No, great points. So let's keep going. So here the question is, how do you see this changing over the next 1 to 3 years? So it is an important point where, as of this year, the results indicate that a widening gap, fewer believe, 30% believe that there will be a widening gap going forward, whereas more believe that there no change. And so that's positive, I guess, on a couple of fronts. But I guess here to the right, there are a couple of comments. And so what are you doing to adapt your organization to each of these changes? Find partners to help us with AI implementation. That's an interesting one. We're focused on a blend of hiring potential and developing internal talent. I think that's, also strong in terms of recognizing, understanding skills and what's needed. Here, I think this is probably, something the industry has been doing for some time. We will need to do more with less. And so recognizing that, there are some constraints, and yet I think this is also really helpful. I'd love to hear your feedback here. Consistent review of competencies. I think it goes back to maybe the skill awareness or maybe a skill audit, recognizing what is available within the organization.
And so it actually interestingly ties to that AI implementation piece. So there are a number of tools out in the market, and a lot of the the HCM tools that are out there, that your HR administration tools, are starting to add AI to their stack. In addition, there are a lot of best of breed type AI tools out there as well that help organizations match their skills demand to skills supply. And so I'm really happy to see some of these responses in that, folks are starting to go down that path. It will help bring transparency to the skills that you have within your organization and skills even outside of your organization. So AI will help really to kind of close this gap and make skills demand and supply more transparent for the individual within the organization, but also for HR and talent teams.
Yeah, Kathy, I want to thank you. Partner talent and DEI transformations, and Deloitte Consulting. Kathy, you've been just a tremendous resource for us here. Thank you for your insights here today.
Thank you so much, Mike. It's been my pleasure. Thank you.